All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. And guys, we are seeing that move down that we talked about in the last video. In my last video, I did say that there was a higher probability that we do move down and that we could still be in a C wave to the downside. After seeing this here as a 3-wave correction from the Trump tweet and then our 5-wave impulse down, the correction in the B wave, and then I talked about this still being a possible C wave to the downside, taking out these lows, and then maybe even coming to take out the ultimate lows down there. And you can see over the weekend, not much happened. That's why I didn't make a video yesterday. We pretty much were just going sideways in this very, very small range in here. And then we started the breakdown really last night, early this morning, my time here. And we are seeing that breakdown here. We are coming close to the lows. Haven't taken the lows yet, but I would expect us to come take these lows now at 81,444. We do have the 886 down here at 80,100. That could be a small bounce level, but I want to talk about this bigger ABC because I did talk about this on Friday, and I did talk about this as still a possibility. Actually, we'll go ahead and play that video from Friday, and we can look at what I was looking at here on Friday. So let's go ahead and play this. I want to talk about that ABC, the bigger ABC that I've been talking about the last couple days, because I do still think it's a possibility. This was our 5-wave impulse in A, our correction in a B wave. This could still be a 5-wave impulse to the downside, with this being a wave 1, this being a wave 2, and then we would need to see our wave 3 come in real strong. But we would need to see that wave 3 come in pretty quickly here. We would need to break this triangle to the downside and see a dump. With it being a Friday afternoon and going into the weekend, I don't know if that's the most likely thing that's going to happen. But I do want to say it is still a possibility of a 5-wave impulse and a C wave to the downside, with this being 1, this being 2. So we would see 3, and we would really probably see 3 take out these lows here. 4, and then 5, maybe all the way down to the pitchfork support down here. So that's kind of what, if we're going to continue this 5-wave impulse down in a C, that's what I'd want to see. That doesn't mean it's going to happen. But all right, guys, so yeah, we were still looking at this as a possibility. Now, I did say in that video, with us going into the weekend, it's more probable that we range in this triangle throughout the weekend. And for me, on Sundays, we usually see moves happen on Sundays because where I'm at in the world, some of the other markets across the world are opening for Mondays when it's Sunday my time. And that's why we're seeing finally some moves happen on the Sundays. We do see moves happen. And so over the weekend, Friday night, Saturday, we just consolidated in a very, very small range at the bottom of the triangle. And then we finally are seeing the breakdown of that triangle now. And so can we still look at this as a potential 5-wave impulse to the downside? If we are, where's our target? So what we could do is we could take the trend-based Fibonacci extinction. You go from the highs of the B wave down to your wave 1 lows, up to your wave 2 highs, and you can see that 1.618 is coming in right at 78,400. Now, I also covered this in Friday's video as well, and so those 78,400 lows are really, really close to the lows here of our ultimate low that we dumped from last week and there. So that could be where we see our 3rd wave end here. See a bounce from there, maybe come back up, revisit that anchored VWAP, and then make the 5-wave down. The CME gap still has not been completely filled, and I do think it's a possibility that we come down to 76K, where we do have this pitchfork band down here for support. So this is something I'm still watching here. There is a couple other scenarios we could see this as. So let me go ahead and get rid of this triangle here. And this does kind of look 3-wavy to me also. You can see this here being kind of like a zigzag correction. And so if this is a zigzag correction, on Friday, I talked about us being in a larger complex correction. And what a complex correction is pretty much it's a series of multiple 3-wave corrective moves within one bigger overall correction. So we know that the Trump tweet up here, it was very 3-wavy with your C wave of that being an impulse, a 5-wave impulse. Then we saw a clear 5-wave impulse to the downside here. And that was our potential A wave of the start of another bigger ABC correction after another first ABC correction. So part of a complex move, complex correction. Now this here, I've talked about this. This is just really choppy and messy because we cannot count this as a 5-wave impulse because of the third wave. But this is corrective. We did see volume decreasing on that move to the upside. We did once again reject from the value area low up there. I still got that box up there, but really that box has been hit and taken. So we can get that off the charts now. And then this could be the 5-wave impulse to finish the C wave of this being an A, B, C here. Or we could be in, once again, a more complex correction where maybe this here was a ABC here. This is really hard to count as anything, but the reason why I'm leaning towards this being a 5-wave impulse is because that little structure there, there's almost no structure there. Let's zoom into the 15-minute chart. And if we look at this, I guess we could count this as another smaller ABC. So we had this, could be a potential ABC because we did end this dump here at the 1.236 fib target, which is a very common ABC corrective target. This could be another smaller ABC here. And then we could be seeing now finally another ABC in what we're seeing now with this being our A, B, C here. And that is all part of a very complex correction where you see multiple 3-wave moves within a bigger correction. So it is still a possibility that this is not a 5-wave impulse, but a 3-wave correction. And if it is, let's look at that. So let's zoom out to the 30-minute chart and let's look at this little zigzag correction that we're seeing down here. If it's a 3-wave move, we can take our trend-based Fibonacci extension from the highs of that move, potential A wave, if it is 3 waves, to the lows, up to the highs. Let's see. Looks like. See, and this is another reason why I don't like that. Look how early those highs were there. And then you have this chop all here. That's why I think it's just a 3rd-wave move. It's more probable to be just a 3rd-wave move to the downside, and we can expect some more follow-through to come in. But if this is a 3-wave correction, you can see our 1-to-1 fib target ends at the SFP of the lows here. Not the ultimate lows, but the other, after that 5-wave impulse we saw down here, after the first rejection of our value area low. So 1-to-1 target is the SFP of the lows. We could see that is at $81,000, which also we do have that bigger 886 there. Excuse me, 886 from the ultimate lows to our highs on the Trump tweet fiasco thing. And you can see if we take that, let me zoom out here so we can get a better look at that. And if we take that 886 target, you can see that 886 target is within the ABC correction area. And we would be taking out these lows, grabbing the liquidity of these lows. So there's 2 possibilities on the chart really right now. I do think this area here could be potential support if this is a 3-wave move down. Now, I have to say I'm not leaning towards this. I'm actually leaning towards the 5-wave impulse down to complete our C wave. With this being a wave 1 down here, that was a wave 2, and all of this is a wave 3, where we can expect that wave 3 to end around the 78,200 lows. See a 4 push up, maybe the 4 comes back to retest that anchored VWAP, and then a 5 down to our pitchfork level. Those are just 2 scenarios I'm looking at for local support levels. I do like the second scenario a little bit better, but we're going to have to see if that third wave, if this is the third wave playing out. We need to keep dropping throughout the day. We need to see that drop continue. Okay, well, let's look at our volume here to see. Now, this is concerning for me because in a third wave, you generally see the highest amount of volume. And look at this, actually. So this does change things. Our volume is very low. Even it's pushing up right now. And if we're going to dump to the bottoms, we need more volume to come in. So after looking at the volume, man, it's tough because as far as structure goes, it's a very big possibility that this is the third wave, but I do not like the volume here. you can see that the volume dump in our first wave down here was much bigger, and the volume dump on this little part, I guess that, this is all considered the third wave if we're seeing a 5-wave impulse down. So you do see some pretty increased volume here at the start of the third wave, but I do not like the way this volume looks. So that being said, we can now keep an eye on this box that I just drew here between the 1-to-1 and the 1.236, with our 886 being in that area, the 886 of the bigger fib pull. We could look for a bounce in this area. That is pretty much going to be the SFP of the lows from last Tuesday into our target zone. All right, that's what we're looking at locally here. As far as the bearish pitchfork here goes, we do have the bottom of the lower band, excuse me, the upper part of the lower band of the bearish pitchfork is around, 80K, 79.9, and that is a little bit lower than our 886 there, but it is close enough, or we could just see the front run of actually touching this pitchfork level here, this pitchfork band. But yeah, Bitcoin's making its move down. Money flow does not look good at all. If we look on Market Cipher B and we go to the hourly chart, you can see that money flow here, let's go ahead and pull this up. Look how bad money flow looks right now. Still coming out really, really strong. On my video on Friday, I talked about how we were not seeing real good money flow or real good divergences on the charts. And that in order to really start seeing bigger bullish divergences, we need to take out that low that was created last Tuesday, this low here at 81, what is that, 81.4, 81.3. So yeah, we're making our way towards that target right now. Even if this is an ABC here, we still expect to take out 81K lows, the 81.4 lows, 81.3. So 80.1 is that 886. We can go ahead and do that 886 on this chart here with the bearish pitchfork. And you can see on Bybit, it's about $80,060. And it is aligning pretty darn close with the bottom of the pitchfork band here. Now, if we do come down there and we do that zigzag correction and bounce from that target box, which this 886 is in that target box I just laid out for us, we would expect to see a bounce, but probably a lower high come in. It might take a week, it might take a little while, and then continue our push to the downside to ultimately take these lows down here at 79.2. We 70, wait, what was that? So 78.2, excuse me. So that's kind of what we're looking at for Bitcoin. Let's go ahead and zoom out here onto the 4-hour chart. Let's look at Market Cipher B. Yeah, it doesn't look too good, guys. We do have money flow is coming out once again on the 4-hour chart. Now, we are setting up for the possibility of bull divs on the 4-hour, but in order to see that, we would have to take out our 78.2K lows. And I do still think, I talked about this also in my last video, I did not like how we front ran the bottom of the bearish pitchfork here. When we hit those 78.2 lows, we front ran the bottom of the pitchfork. And I said, you know what? There's a possibility that we can still come down and actually hit the bottom pitchfork support, which depending on how long it takes, it could be right around, 75K or so. And that would give us, if we did see a pretty quick move down there, maybe we come bounce here, do something like this here, then we would be seeing lower lows in the price action. And then on our 4-hour chart, it would give us the possibility of seeing some bull divs if it happened pretty quickly here, because we could then see higher lows on the momentum waves. Maybe this does something like this and comes down here. Or actually, if we see a small bounce, we'll do this. See that small bounce, maybe see that momentum wave come up and then something like this. And then it would give us not only local bull divs, but more regional bull divs on the 4-hour time frame. And then see finally a bigger push to the upside. All right, and let's go on to our daily chart here. Yeah, and you guys can see finally now we're starting to break that anchored VWAP that held us so well. That anchored VWAP is really starting to break down. And if we close today's daily candle below this anchored VWAP, that's not going to be a good sign for Bitcoin, because you can see on the daily chart that this anchored VWAP, let me go ahead and get rid of a couple things here so you guys can see this better. On the daily chart, this anchored VWAP, yes, we're seeing wicks past it on the daily, but overall, this anchored VWAP on the daily has been holding as support. If we start to lose that anchored VWAP there, it is, and close daily candles below it, it is highly probable that we come lower than the 78.2 level. Once again, going back to the distribution video that I made a couple weeks ago now, or you know what, last weekend, it was relatively recently. I did talk about, I ultimately see us a strong possibility of us coming to visit that 72K to 70,000 level, where we have major support with the value area high of our 7-month range. It's our golden pocket from the 49K lows to our all-time high. And there's just a lot of support down there. It's also a support resistance flip of the last 2 bull runs highs. And I do think it's a possibility that we could continue to work our way down to that level over the next couple of weeks. I'm not saying it's going to happen like this week or quickly, and I'm not saying we're going to go straight there. We will see small bounces along the way, but I do think that that 70K level is getting more and more of a probability. And if we close our daily candle today below this anchored VWAP, that will increase that probability that we do come down much lower. You can see money flow is on the daily is still looking pretty bad here. And I've been talking about this money flow in this range here the entire time we've been building this range. I've been warning about this money flow the entire time we were building this range. A lot of people thought we were going to break this range to the upside. And money flow can give us a more long-term indication of what the trend is doing. While we were building this entire range in here, money flow was decreasing very consistently and rapidly. And we even had bear divs, you know, at the top here. Bear divs here, higher highs in the price action, lower highs in the momentum waves. Once again, another higher high with the swing failure pattern, another lower high, multiple drives of bear div on the daily time frame. And when we came down here on Market Cipher B and we saw money flow starting to cross over into the red and we didn't see a bounce, because sometimes the 0 line will act as a support level for money flow and you'll see a bounce. You know, something similar to this where you saw a small bounce here. Now I know we kept going, but suffice to say that money flow does not look very good, and it is telling us that we might continue to see more downside. But once again, as far as bull divs go, and I did talk about this on Friday's video as well, if we do come down and make new lows and fill that CME gap, we will be seeing possible bull divs on the daily. And that would give us a really good signal to at least push up, maybe all the way up to 93K again, to retest our value area low. On Friday's video, I did say ultimately Bitcoin is still showing weakness because 2 times now we have tested this value area low after losing the range with volume to the downside. We've been trading in this range here. We lost that range with volume to the downside. We came back up to back test that range to see if we were going to confirm. You can see the value area lows right here around 93K. Came up, back tested it, rejected, came up a second time, back tested it, rejected. So to me, that told me that Bitcoin is still showing weakness, that it does not want to establish fair value within this range here between 93K and 103K, and that we are trying to reestablish a new fair value for Bitcoin below that range. And now we can look for anytime you break a range to the downside, you bearishly backtest it and reject. Usually you can zoom out and look at the last bigger range that happened on Bitcoin, and you can look for the backtest, the bullish backtest of that range's value area high to see ultimately if it's going to reconfirm and have fair value be reaccepted back into this last range, or if it's going to bounce from that and establish that, okay, the fair value for Bitcoin is going to be higher than 70K. It's going to be somewhere between 70K and 109K, and then we'll start to form a bigger range there and see what happens there. But I was seeing the bearish signals on the charts the last few weeks. We talked about how there was a greater probability of breaking this range to the downside. We did break that range to the downside. We did get a bearish confirmation of the rejection of that range 2 times, and now we're continuing to drop here. So overall, we have to keep into context the larger perspective of Bitcoin. And unfortunately, I do not like saying this, but unfortunately, Bitcoin is showing weakness, and there is a higher probability that we continue down on this move. That's kind of what we're looking at here for Bitcoin right now. Let's go into the liquidity heat map. Now, we have taken out most of the liquidity. On Friday's video, I also talked about the local liquidity at the bottom of the triangle and some liquidity at those double semi-equal double highs at the top of the triangle. Let's zoom in here on the 1 hour chart. And I talked about there was liquidity resting right around 92K, where we have these two semi-equal highs. And then there was liquidity at the bottom of our triangle. And we did see that break to the down, not hold. We broke the triangle down. We took the liquidity below us. Let's see. I think I still had that triangle somewhere. I guess I deleted it. All right. Let's watch this here. See what happens on this. I expect this to keep dropping. We're probably at the local 886. Let's go ahead and do our fib pull from the 82.4 lows down up to our highs of that move. Yeah, we're bouncing pretty much from the 886. But once again, after you hit the 886, even if we see a bounce here, we now have a much more increased probability to come take these lows, which I do think is a big possibility. Even if this is a three-wave correction, the target is in this box that I laid out here. So I don't expect much of a bounce here. Actually, I expect us to reject from that anchored VWAP that we're seeing right now on the charts. Let me go ahead and get rid of this. This anchored VWAP that we're back testing right now, I actually expect us to reject from this to continue down into this box. Yeah, so liquidity, we've got some above us at about 87.5 is when it ends, 87.3, 87.5. We've got the liquidity there, so let's go ahead and look at that. Yeah, that's the liquidity. Let's see here. I mean, it's pretty much all these lows here. And I want to talk about this drop to the downside, this break of the triangle that we saw and this drop to the downside, because if we look at our CVD indicator, and I'm going to go into that in just a second. I just want to draw this triangle here for a second. There you go. That was your triangle that we were seeing break. Let's go right there. All right. And we're seeing that break to the downside. Now, let's go on to our CVD, and let's look at our CVD here. Let me go ahead and refresh this. And we can look at our CVD here. All right, we're just seeing a little bit of a short squeeze right now. So this little push up that we're seeing, you can see how the CVD is starting to curl up, but our open interest is dropping. What that means is there's just some shorts getting liquidated. Late shorters are getting liquidated. You can see that here. That's a pretty big drop in open interest. It's just a little bit of a short squeeze. That's all. I don't expect much from it. Just like here, we saw a little bit of a short squeeze because our open interest was decreasing, and then we continued the move down. Once again, we're seeing a little bit of a short squeeze. We'll probably continue the move down. But let's go ahead and talk about this real quick while we're here. So after that triangle broke down, yeah, let's get this in here, and let's make this like this so you can see that. All right. So we had our triangle here. I guess I'll just kind of eyeball it. This is not going to be perfect, but this is kind of what we had the bottom of our triangle. We're breaking it to the downside. And you can see on this breakdown of the triangle, we are seeing a lot of shorts coming. That's why CVD is dropping so aggressively in this area. Look how CVD has been dropping since we're starting to break the triangle to the downside. So a lot of shorts, mostly shorts are coming in. What does CVD measure? CVD measures aggressive market participants. So market shorters, market longers, the aggressive market participants. Because our CVD is dropping here, that tells us that it's shorts coming into the market. Now, there's two types of shorts. There's fresh shorts that are causing the price to go down, new money that's pushing the price down, and then there's shorts caused from longs getting stopped out, sells in the market pretty much. And you can see here, which one do we know it is? We know our open interest since the break of the channel. Like if we come here right where we started breaking the channel, this area here, you can look here, shorts coming in, and look at our open interest. This is really key to understand. Our open interest has been increasing on this entire breakdown. So what does that tell us? That tells us that it's fresh shorts coming into the market, that new money coming into the market as shorts, and it's successfully breaking the price of Bitcoin down. Now, because these shorts came in pretty late here, especially towards the end, you can see a lot of shorts coming in. I don't understand why people do this. Maybe they think bigger moves are coming or something, but you see a lot, like especially up here. Look at all these shorts that are coming in right in here towards the towards after breaking the move down. I guess if you think it's going to be a bigger breakdown, then you could short here and put your stop loss up against here. So I do see a theory behind it, a trading plan, a valid plan behind it. But we had a lot of fresh shorts come into the market a little bit late, a little bit after starting to break this down, and those shorts were new money. So this little push up we're seeing right now is just a bunch of late shorters that shorted just towards the bottom of this move that are starting to get stopped out right now. But we're still, you guys, this bounce that we're seeing right now is nothing really big. We are still just trading around that anchored VWAP. Let's zoom onto the 30-minute chart. This anchored VWAP, we're breaking the anchored VWAP to the downside. So it could just be a short squeeze to come up, back test our anchored VWAP, and then continue down. That's what I am leaning towards right now. Now, if we start to reclaim this anchored VWAP here, we're most likely going to move at least to the VWAP here, if not even higher. But this is what we're looking at right now on Bitcoin. We see that our open interest was increasing on this push down. That means it's fresh money, new shorts coming into the market, successfully pushing the price down. I expect us to continue to drop at least to this box of support between 81,000 and 79,800, that area. And if not lower, if not to take out the 78.2K lows, if this is the wave 3 down. But unfortunately, volume is not really supporting that theory right now. The volume on the move down. So that's what we're looking at for Bitcoin. Looking a little bearish here. Overall, in the larger context of things, Bitcoin has not been able to reclaim the value area low after backtesting and rejecting 2 separate times, which shows us a sign of weakness, which shows us the larger market is trying to reestablish a new fair value for Bitcoin below our range of 93K to 103K. Between the last few months here, 90 days, Bitcoin had a fair value between 93K and 103K. Now we are losing that fair value to the downside, that established price fair value for Bitcoin, losing it to the downside. We are, though, starting to form a bigger range. You can see this pretty clearly here, and this is around this red midline, this red pitchfork midline, which oftentimes you do see consolidation for many days around a more major pitchfork midline. And so what we can look at here is now a new potential range is forming on Bitcoin. So we can go here. You could either pull it from this low here, all this kind of sideways consolidation around the midline, and we're even losing the value area low right now. You can see the value area low is right around that VWAP. So if we do even pump up a little bit higher, we're probably going to reject from that area and continue down. Or we could do this pull. You could do this pull a couple of different ways. I like this pull here because you can see from after this little aggressive move, this has been mostly sideways here. And this actually looks really nice because you can see our point of control respected really nicely on this move. Point of control acted as resistance up here, dropped us, back tested it as support, bounce, rejected from value area high again, and now we're breaking down to our value area low right now. So you can play this as a range. Right now, Bitcoin is establishing a new range within this area between 93K and 70. I would say these lows here at 81.4. So I would say that's our new range that we're trading in. Once again, guys, trade the range until it breaks. When you're near the lows of the range, you look for longs. When you're near the highs of the range, you look for shorts. Now, we are near the lows of the range right now, but knowing the bigger Elliott context in play, I would expect us to continue to deviate that range a little bit lower to grab the liquidity of our lows at 81.4 or 81.4 into our box of support, and then maybe come back up into this range here. Just because of the Elliott theory that we're seeing here and the fresh new shorts that are pushing the price down. Okay, that's it for Bitcoin. Let's go ahead and go on to Ethereum here. And Ethereum is also breaking down. Excuse me, guys. Let's zoom out onto the 1 hour chart. Oh, and actually before we move on, let's go ahead and let's look at our new, now the week hasn't closed yet, so we can't look at weekly levels, but we can look at weekly levels to confirm later today. And as far as daily supports, we don't have really anything new on daily levels except for that daily up near 94.3. We have that daily level still up there. I'm going to get rid of this purple box now. We saw that rejected us. Okay, so yeah, not much as far as daily levels go here. You can see no new daily levels around the bottom here. And we can look at our daily naked points of control. Okay, so we do have a new daily naked point of control. Let me zoom in on the chart so I can get it marked out more cleanly. And this is very interesting where this daily naked point of control is at, because you can see here this daily naked point of control is coming in right at the back test of our pitchfork midline. So let's go daily naked 88,364, at least on Coinbase. Okay, let's turn that off. All right, that's actually very interesting here, because if we do bounce from this box, say we continue our move down, bounce from this box, we might come up to hit this pitchfork midline and then just continue pushing back down. And yeah, that could be a good level where we want to look for. Let's also go ahead and do our Fibonacci pull. So right now we're going to do the Fibonacci pull from the highs to the current lows, but I do have a feeling that those lows are going to change. Let's go to our golden pocket. Okay, golden pocket is in that general area, but look at what would happen if we dropped a little bit more to this box. Let's just put it right in the middle of the box here. Look at where our golden pocket would be. I'll put it right in the middle of the box there. Golden pocket would be right at that naked daily point of control and the pitchfork midline bearish back test. So I do think it's a big probability that we come a little bit lower to come into this box of support here, then see the bounce from this box of support, a swing failure pattern grab of the lows into our bigger ABC support, push up to this area, which would now be acting as our resistance on the charts, 88,000 to 88,500. Now, this is a theoretical fib pull right now. This fib pull is not actually valid until we come into this box. So we're a little bit early. We're just speculating and laying out plans. Okay, that's it for Bitcoin. Now, Ethereum. Ethereum is breaking. Let's see here. Let me go onto this chart first. All right, yeah, we're breaking our area, our daily level to the downside. And I did talk about the only two levels really I was interested in on Ethereum was the purple box above us, this resistance above us, and this support below us here. And we are coming down to that support level, which is the bottom of our big daily descending channel. And we have our one-to-one ABC correction target down there. So this corrective target here, if this is, we saw our clear 5-wave impulse down here in an A wave. Now look at Ethereum looks very more clear on the B wave push up. It's a 3-wave zigzag here, here, here. 3-wave zigzag in a correction in a wave B. And then you see here 1, 2, 1, 2, 3, 4, 5, 4, 5. So it looks like we could be in a double 1-2 impulse to the downside on Ethereum. Ethereum's Elliott structure looks a lot more clean than Bitcoin's Elliott structure. This was a clear 5-wave impulse to the downside. This was a clear 3-wave zigzag move to the upside. And in this structure here, at least on the 2-hour chart, I would count this as a double 1-2 impulse with our 1 wave here, 2, another 1, another 2, and obviously this is the start of our 3rd. Look at how impulsively we're falling to the downside. You expect your 3rd wave to be the highest, most volume-filled wave to the downside. Maybe we do see a bounce at the SFP of the lows here at 1991. We could look for an SFP to end our 3rd wave, but then you would still expect a 3rd wave 4, 5, 4, 5. You'd expect, since we had 2 1-2s, you expect 2 4-5s. And so that's kind of what we're looking at here on Ethereum, a push to the downside. We are seeing some volume. Let's actually look at our volume here. Okay, let's go here. Let me get to that volume here. Volume is, yeah, I mean, it is a weekend, and we are seeing a small increase in volume here on this wave 3 drop to the downside, but it's not near as high as some of the volume we saw. Like, even look at our wave 1 down here, higher volume so far. Now, that doesn't mean volume can't start kicking in, But I do see, as far as structure goes, this looks like a pretty clean 5-wave impulse, 3-wave corrective move up, and are we starting another 5-wave impulse down? If this is, see, I don't like this being an ABC, with this being your A wave here, this being your B wave, and then a C here. And the reason why is because, look at, first of all, this low here is lower than this low, and this high here is higher than this high. So that just doesn't make sense. It makes more sense that this is a 1, 2, 1, 2, rather than a wave A here, B here, C here. It just does not make sense as far as Elliott structure goes. So I think that we are pushing down. What we can do is look at our trend-based Fibonacci extinction. We can go from the highs of 1 to the lows of 1 to the highs of 2. And let's go ahead and look at our 1.618. Okay, so 1925 would be the end of our third wave. The potential end of our third wave would be at 1925. Do we see a bounce at 1925 just to come back up and make a 4, 5, 4, 5 to finally come into our bigger box of support where we could hit the bottom of the channel and really see a move up from there? That would also be in our target of our bigger ABC correction wave to the downside. Okay, let's zoom out onto our daily chart. And let me go ahead and clean this up just a bit here. Okay, we're going to get rid of this daily now. Now, in a few hours here, we are going to see in about, 5 hours or so, we're going to see a new daily confirm as resistance on the chart. I am not going to mark it out yet because we still have 5 hours. But if you want to do that, you just come up here when that daily candle closes at around 2200. We're going to see a new daily level, daily resistance on the charts. Okay, yeah, guys, I mean, that's pretty much it for Ethereum. We're still grinding down in this bigger descending channel to the downside. I can get rid of this pitchfork now. We absolutely lost that pitchfork to the downside. And let's go ahead and zoom in just a bit. Let me come in here and turn off our volume. Let's go on to the 2-hour chart. And let's look at our naked daily points of control. Yeah, nothing really, you guys. There's no naked daily points of control anywhere near us. To the downside, all that we have really for support is that SFP of the lows at 1991. I don't think we could see an SFP of these lows on the end of the third wave and then a 4-5-4-5. But honestly, Ethereum looks like it really is going to come into this box down here. Now, this box of support is between 1885 and 1810. And I do expect us to see a bounce from this box of support. If we lose this, we're going down to 1500, guys. I mean, 1588 to 1506 is a major, major support level. But until we get there, we play level to level. So first level that we're watching here on the charts is the SFP of the lows. Now, even if we SFP these lows and see a valid SFP, I would expect a lower high to come in just based off Elliott structure, and then eventually to come down to this green box. So if you take that long, just be prepared to take profit at a lower high. You could do a local golden pocket pull, or you really want to look for the rejection between the 382 and the 0.5. That's what wave 4 targets are. All right, so that's what I'd be looking for on Ethereum. Not much else to discuss here. We are in this little range, though. You could mark out like from this at the end of this impulse right before our Trump 3-wave corrective move here sideways. This is a little range you could be playing, but look at this. We're even breaking the value area low to the downside on that range. So what you could look for actually in a wave 4, if this is our 1, 2, 1, 2, our third wave brings us to that 1915, I think it was, something like that. We see the SFP. You could look for your 4-wave to reject from the bearish backtest of the value area low. And then you would actually see a 4, 5, 4, 5, 2 4 5s in your double 1, 2 impulse to the downside. So yeah, that's what we're looking at on Ethereum. Not much else new to discuss. It's looking bearish. We are losing more major support levels. Let's check out our other chart here real quick. Yeah, and even Man, it doesn't look too good on Ethereum right now. All right, I don't like this range as much as I like this range here because this was clearly the impulse down. So after the impulse down is completed, we start ranging more sideways. So you take your, remember this fixed range volume profile, it's in the name of the tool. You're measuring the volume of a range. Now this was part of an impulse down. So you do not necessarily want to include the impulse if you can avoid it. We have a clear range that's forming from the bottom of the impulse. So put your range here at the bottom of the impulse, and you can see we have a nice clean range here, rejected from value area high, deviation of value area high, drop back in, rejected from value area high, rejected from point of control, dropping, losing the value area low. Value area low bounces a couple times in here. So yes, not looking too good for Ethereum, to be honest with you guys. I mean, just really quite bearish. Let's zoom out onto the daily chart and let's look at our daily. Let me get rid of this. I need to take some time to clean up this chart a bit. I'll do that after the video's over. Okay, larger context of things here. You know what, guys? On the daily chart, this does kind of look like from the 4,100 highs, a wave 1 here, a wave 2 here, a wave 1 here, a wave 2 here. So there's your double 1, 2, your big third wave, your big 3, 4, 5. We're in 5 right now. Do we see a bounce at the 1880 level, that box of support? Then we would do a 4, 5, another 4, 5 on the daily because we have 2 1 2s up here. We have to have 2 4 5s down here. So Ethereum looks a little bit more bearish on as far as Elliott impulse count goes, but let's look at this. From these lows here, you can see our momentum wave was really bottomed here. So we are making lower lows on the price action, and look at our momentum waves, higher lows on the momentum waves. So we are seeing a daily bull div already confirming on Ethereum. Then what that tells me is that we could see a bigger bounce. Maybe we want to continue. Maybe this was the end of the third wave. This was a 4 5 4 5. Maybe we've already done. So actually, let's zoom in on this. Let's look at this here. 4 hour here. Let's go. 1 2 1 2. Big third wave here. 4. We can't call that the 5. Oh, yeah, we can because it did take the lows. Let's see, did it? Let's mark that out. Yeah, we did. Okay, so let's look at this. This could be our first 4, 5, 4, and then we could be in the last 5 right now. And that would make sense knowing that we have bull divs on the daily chart. So what am I going to be looking for then? You're going to be looking for your big bounce from the bottom of the bigger descending channel. Let me go ahead and go back onto our other Ethereum chart, our Coinbase Ethereum chart, and you're going to be looking for a bounce here to be a major support level where we would see those daily bull divs start to maybe play out and kick in, and we could see something like this, dump, boom. Now, of course, on the smaller time frames, we still haven't completed our impulse to the downside, our double 1 2 impulse. So you can expect that maybe to take a couple days to get down to this area to complete the smaller impulse. Remember, Elliott waves are just fractals within fractals within fractals, just like nature. You see fractals within fractals, subcounts within larger counts. And so if we zoom in onto that 15-minute chart, we are looking at this as a smaller double 1 2 within our bigger daily double 1 2. But we have here a 1 2 1 2. We're in the third wave now, and we would expect to continue over the next couple days to see that 4 5 4 5 into the bottom of our channel, into our major support, and then see maybe our big bull divs on the daily start to play out. That's all I got for Ethereum, guys. That's it. Next up, let's go to Solana. Solana, man, Solana's breaking that level to the downside. Okay, so I've had this box highlighted. We are in our box of support, but we are losing our pitchfork midline. You can see how well, let's go ahead and zoom out on the 2-hour chart. You can see how well this pitchfork midline overall has been holding as a support level, especially if we zoom out on the daily chart. That pitchfork midline, we were seeing wicks past it. Wicks past it, wicks past it, wicks past it, but no daily closes below this pitchfork midline. We are finally rejecting from our point of control of our large range. Now, this range is over a year long. Look at it, it goes back to the March highs of 2024. So this range is from March of 2024. Now we are at the value area low of that range as we speak here. Let me go ahead and pull this over. Yes, and that is our support box area where we are seeing, let's zoom back into the hourly. We are in our box of support that I'd marked out, but look at how clear this was. Finally coming down here, chopping around, back tested our pitchfork midline, rejected. Clear rejection on the back test of our pitchfork midline. So what did we look for? We had a naked daily point of control at 127.8, right where our value area low of our large year-long range was. Now, I do want to see us come just a little bit lower to take the liquidity of these lows at 125.5. If we see the liquidity grab into our 1.618. So technically, this should be a little bit lower. Let's go ahead and let me zoom out for a bit here. Let's grab this. This should probably be down to here where our 1.618 is. And if we see a liquidity grab into our 1.618, we might see a move up, but I don't like how, okay, let's zoom onto the 2-hour chart. Okay. 1, 2, 3. So it does look pretty impulsive here. You can see just similar to Bitcoin, we had this 3-wave corrective move up from the Trump tweet. We had our 5-wave impulse down here. We had a 3-wave corrective move here. And are we in a 1, 2, 3, 4, 5? You know, we could be doing something like that right now to finish that. All right, so yeah, we're at support right now, but unfortunately, it doesn't look like the impulse, we could keep dropping, but I am looking for a bounce from this area. I would like to take the lows at least though, the 125.5 lows. And if this is a 5-wave impulse down, with this being your wave 1, this being your wave 2, and we're in a wave 3 right now, the 1.618 is the target bounce. So an SFP of 125.5 into 123.4, then see a push up. You'd only want to look at the 382 to the 0.5 of the 3rd wave down, and then you would see a dump there to finish that 5th wave. All right, let's go ahead and turn on our naked dailies. Guys, I just got a phone call, and I do need to leave here shortly. So unfortunately, after Solana, I'm going to have to end this video, but I will make another video later today covering the rest of the alts that I normally cover. And I'll also look at some of the comments. And if you have anything in the comments, if you want me to cover anything, post it in the comments, and I'll look at that later today, and I can cover that this evening. Yeah, we do have a new naked daily point of control at 143.49. And we're at support, so that's what I'd be looking at. The 143.49 is a bounce level, but our pitchfork midline, now that we're breaking it down after the back test, our pitchfork midline is going to be our general area where we want to look for that to be a resistance now. Let's go to the hourly. 2-hour. Yeah, I'm, let's see here. Let's look at this as a potential, because this could be, I don't like that as a running flat. Let's look at this though, this move here to here to here. And let's turn on our 1.2 ABC. So, okay, I do expect a bounce from the SFP of the lows. Even if it's a 3rd wave, we'll come down to like 123.4. If this is an ABC, then we're probably going to SFP the 125.5 lows and then see a move up. But right now, look at what's happening right now as we speak on the charts, guys. We are front running the SFP liquidity grab. Remember, anytime you come this close to a liquidity grab and you front run it and see a bounce before, that makes it more likely that it's not going to work if we come back down. So if we kind of do something like this and move up just a bit and come down again, we're probably not going to SFP it. We're probably going to do this, boom, you know, way lower. So just be aware of that. The front run of the liquidity grab is not a good sign. All right, guys, I gotta get going. I will make another video. Just if you got anything out of this video, please hit the like button. Please hit the subscribe button. I will make another video later today. If you have any requests, put it in the comments. All right, have a good one, guys.